Tax literacy in America is abysmal. The capacity for the average citizen to understand their tax roll is laughably low. There are actually full meme trends about not understanding this key duty as a citizen. And we basically are in a standoff at all times with the IRS to guess our tax burden. And if they decide that we didn't do it right, it's a nightmare of litigation, even though they're just as likely to be wrong. The main problem with the tax code is how many words does it even consist of today?
Yeah, the tax code is estimated to be more than 4 million words right now that were changed more than. This is the worst part of it. It's one thing to have a massive tax code. It's another thing to have a massive tax code that's changed constantly. So the 4 million words have been changed more than 6,000 times just since 2001 alone. So we've got not just the growth in the tax system. And as of 2001, the estimated size of the tax code was about 1.3 million words. Now we're up to over 4 million words, and the constant changes is what keeps people on their heels.
The constantly changing, it seems like that's by design. Are they doing this on purpose?
Oh, there's no question about it. Every single time there's a federal election, a new Congress, a new president, the first thing they do is start talking about changing the tax code. They listen. You got to understand here that the tax code is the primary means that Washington uses to control people's behavior and to pick winners and losers in the marketplace. This is how this is how they do it, is through tax benefits, tax incentives, and tax punishments. All right, so they penalize the so-called undesirable behavior with tax consequences, and they reward the what is perceived to be the favorable behavior with tax benefits. So the definition the definition of favorable behavior and negative behavior is changing all the time, depending on who's in Congress, depending on who's writing the laws. So it is something they're doing on an ongoing basis, and there's no question about the fact that it's deliberate. What we're seeing right now with the leftists in Congress is the desire to punish millionaires and billionaires. And it's not just a matter of raising additional revenue from them. They want to punish them, and they want to punish them for being rich people. And so we're talking about wealth taxes. Elizabeth Warren has floated a wealth tax. Of course, Kamala Harris, when she was a presidential candidate before she was the vice president, was supporting a wealth tax. Obviously, the Biden administration promoted a wealth tax, and all of these things are designed specifically to punish certain behavior. And the entire Internal Revenue Code is really pointed at that simple fact to benefit this type of behavior and to penalize some other type of behavior.
So if they're picking winners and losers and they're penalizing behavior and rewarding certain behavior, doesn't that sort of kind of give credence to the idea that there are loopholes in the tax system that certain people are able to exploit over other people?
Well, I don't like the word loophole and I don't like the word exploit in your sentence. Okay. Here's the thing that's going on with the tax code. There are very specific provisions in the code that allow people to take tax benefits for particular transactions that fall within the definition of whatever this particular statute is. Let me give you the simplest example of all that everybody will understand. If you're a homeowner and you're paying real estate taxes on your I'm sorry, you're paying mortgage interest on your mortgage. Well, real estate taxes for that matter too. Could be real estate taxes and mortgage interest. Let's use both of them. They fall into the same category and they're equally simple. All right, the Internal Revenue Code provides a very definite tax deduction for the expenses you incur for the mortgage interest on your home up to certain limits, and for the real estate taxes you pay on your home up to certain limits. That's not a loophole. A loophole is an unintended consequence. The Internal Revenue Code is very definitely a compilation of intended consequences. So when somebody takes a deduction for the real estate taxes and the mortgage interest on their home, the net result of that deduction is it lowers their tax liability. That is not a loophole. That's not a secret. That's not a hidden booby trap or
Oh, sure,
trap
sure,
door.
sure. But what we're talking about with the picking the winners and losers in the marketplace and being able to give certain people benefits for certain activities over other activities, what exactly does that mean compared to what you're just described as legal deductions and honest ways of lowering your liability?
Yeah, that's a good question, and the another perfect example in answer to your question are the electric vehicle tax credits that were put into the Internal Revenue Code under the Biden administration. Tens of thousands of dollars of electric vehicle tax credits have been built into the Internal Revenue Code, and what that does is it rewards people for buying an electric vehicle, and it punishes people for those who don't buy an electric vehicle. And this is Washington's way of picking winners and losers in the marketplace. They want to destroy the internal combustion engine and eliminate fossil fuels. They want to encourage electric vehicles, so they give you tax breaks to buy the electric vehicle, and you get no consideration for buying an internal combustion engine. There is no better example than that of your question.
Interesting. Okay. So it seems clear that the changing of the tax system, they're changing the tax system entirely is the only way to rein in these insane, these insane. What's the word you were using?
Well, the legislative changes. What we have to do is change the tax code to take the power out of the hands of Washington politicians and bureaucrats from their ability to control or dictate outcomes in the marketplace. One of the 10 essential elements of a sound tax system is a tax system that's neutral, that does not use the power of taxation to promote this business and penalize that business. All right. Every single tax that occurs in the marketplace creates distortions. Economists refer to them as distortions. All right. And here's what I mean by that: a distortion is something that causes you to do something you otherwise wouldn't do, or prevents you from doing something you otherwise would do. Every tax creates distortions. It creates either incentive or disincentive to do this or do that. A sound tax system has to have the least amount of distortions in the marketplace as possible, so that people make their decisions based on sound business decisions, sound financial decisions, and decisions based on what's best for their family,
Right.
not based on tax consequences.
So basically, eliminating the system that allows for them to make these arbitrary changes every few years, and enshrining a system that stays the same. But what would that system look like? What would be the best system that would be able to stay the same and stand the test of time?
Well, to my thinking, that system is a national retail sales tax. If what my proposal has been all along is to take all the five taxes that exist at the federal level, right? I should say the five major taxes that exist at the federal level. That would be the personal and corporate income tax, the estate and gift tax, the social security tax, not the benefit program, but the tax, and the unemployment tax. Those five taxes collect literally 98.5 to 99% of all federal revenue collected. I would take all five of those taxes and abolish them all, and I'd abolish Internal Revenue Service and the Internal Revenue Code along with it. And I would adopt a broad-based national retail sales tax on all consumption goods and services. That will create a tax system that has the least amount of distortions. That will create a tax system where the bureaucrats and the politicians in Washington do not have the power to pick winners and losers in the marketplace.
Okay. Okay. Um, But when it's a broad-based national retail sales tax, people often counter with the argument that it's a regressive tax and that it hits low-income people harder, and that it's not fair because really we should be taxing rich people who have more money and they should pay their fair share, and all those miscellaneous arguments. How,
Yeah,
how,
well,
how how do we deal with that?
Well, the key argument that you just made there is that the tax is that the argument is that the tax is regressive.
Regressive.
It's an incorrect argument. All right, so let's understand what we're talking about here when we're talking about regressive tax. A regressive tax hits lower income people harder than higher income people. The opposite of a regressive tax is a progressive tax. A progressive tax hits higher income people harder. Our graduated income tax system is a progressive tax, which means that as your income rises, you pay a greater percentage of your income in taxes, not just more tax, but a greater percentage of your income is paid in tax as your income increases, right? So that's a progressive tax. And so people think that the only two choices are between a regressive tax and a progressive tax, meaning if we're not going to have a regressive tax, we must have a progressive tax, and vice versa. If the tax isn't progressive, it's necessarily regressive. And that's not true. It's just simply not true at all. The idea of a progressive income tax comes from Karl Marx. Karl Marx, the second plank of Karl Marx's Communist Manifesto, was to introduce a heavy progressive income tax in industrialized societies, specifically for the purposes of transferring ownership of wealth from the private sector to the government. So that's what the progressive tax is all about doing. It's not about raising revenue, it's about destroying the ownership of capital in the hands of private parties. All right, but there's a third option here. So we're not stuck with these two options. Progressive, which is not good because it's immoral, right? Regressive because it hits lower income people harder.
Also
That's not
immoral.
attractive. All right, also immoral, no question. The third option, which nobody ever talks about, is a proportional tax, a tax that falls on all income levels in proportion to their wealth or parsimony, depending on their situation. And when we have when we have a broad-based retail sales tax, what happens is lower income people naturally pay fewer taxes because they spend less money, and higher income people naturally pay more taxes because they spend more money. The lower income people, lower income taxpayers, lower income consumers, by the
So
low level automobile, right?
so sure, but let
Go
me
ahead.
interject here with where I think the confusion of this idea of regressivity comes from, because low income people, by nature of being low income, spend more percentage wise of their income versus high income people who end up spending less money, therefore less of their money gets taxed. Is that how that
Well,
logic
well,
gets?
that's essentially the core of the argument, but it's not accurate. All right, it's not accurate in this sense. It's true that lower income people spend less money. And it is also true that lower income people spend a greater percentage of their money. They tend to save less. That happens to be true. But it, but but it but it is also an economic reality that they don't pay as much taxes as high income people. Now, the fact of the matter is, and all you got to do is look at the spending statistics in the United States. High income people spend all their money. The savings rate in the United States is relatively low. High income people, at least up through the mid hundreds of thousands of dollars, generally spend their money. All right, that's what they do. But here's the reality of the situation. If you have let's say you've got a high income person, and just pick a number, two, three, $400,000, which is not a lot of money, but it's high income, no question. But let's just say that we got this $300,000 person that's only spending 80% of their money. All right, so they're still spending a remarkably greater amount of money in consumption items and in general spending than the low income person who might be making 50 or 60 or $70,000 a year. So right off the bat, we're getting a lot more money from the higher income person. But let's delve into this a little bit further. Let's say the high income person who's making 300,000 is saving 10% of their money. Why are they saving the money? They're saving the money now to be able to spend it later. All right. So what we've got here is three different savings models. All right. We got short-term savings, we got long-term savings, and we got medium-term savings. Short-term savings, people say, well, I'm going to save for my vacation next year. So that's short-term saving. They're done with that saving, they go on vacation. The medium term saving is somebody said, well, we're going to save for the next 5 years to buy a house. All right. So that's the medium term. Long term savings, I'm going to save for my retirement. All three models end exactly the same way. They end in spending. And if by chance, that person who's been saving that money, whether it's short term, medium, or long term savings, if that person happens to die in the meantime, the money that they've managed to save gets inherited by their children, right?
Who
And
then
what do the
spend
kids
then
do?
who then go on spending sprees if
The
they're not
kids,
as financially intuitive as their parents.
that's exactly correct. The kids piss it away much faster than the parents ever saved it. There's no question about that. There is simply no doubt about it. It is a matter of economic fact that a dollar inherited has significant less value than a dollar saved. That's just a reality.
Well, that's also a in great due to the fact that Well, that's also greatly due to the fact that anytime you save a dollar, that dollar is just getting eaten away by inflation over the years, like especially the
Well,
last few years.
yeah, there's certainly truth to that, and of course, it depends on how the dollar's invested. If you just have the dollar in your mattress, then there's no question that it's
Yeah,
losing
invested
value.
versus saved is a huge semantic argument that would be would
Well,
need to be had, but that's kind of not the point, anyways. The
no,
another thing that Trump talked about was eliminating the income tax, like you said, but then imposing more tariffs. Is there a way that tariffs could be feasible from a national standpoint?
well, Trump's argument is that the country operated for roughly 130 plus or minus 130 years without the income tax, more like 140 years without the income tax, and it funded its activities largely on tariffs and excise taxes. And he's right about that from a historical standpoint. When I said that those five major taxes collect 98, call it 98% of all federal revenue. The other 2% is collected from manufacturers, excise taxes, and import duties. Now, here's the difference. The government of the United States of America today is spending what, 7 trillion dollars a year? All right,
That's
we're
just the
taking
stuff on the books too.
I mean, this is this the spending pattern for the United States government, especially over the last 4 years of the Biden administration, is so astronomically out of whack that there is no possible way to fund federal government activities at their current level with manufacturers, excise taxes, and import duties. It can't be done. All right,
Well,
so there has to be another source of revenue. There also has to be, and this is undeniable, there also has to be radical transformation to federal government spending programs. Our budget has got to
radical
be cut.
transfer, and by that means slash
Oh,
everything
oh yeah, oh yeah. I'm talking about cutting that budget by 60% to start with.
to start with.
And then we go in from there and get specific. It is just so far out of whack, it's not even funny. And of course, the leftists in the federal government, and not just the leftists, too many Republicans, of course, just want more and more and more government programs to do this and do this and do this. And what we're going to end up with is a government that completely saps the lifeblood, the economic lifeblood out of the productive component of society.
Well,
That's where it's
it's
at.
already starting to happen. I mean, my generation doesn't want to work because I mean it's not worth it, frankly, from a wage standpoint, from a productivity standpoint and a wage standpoint. That number is way out of whack. So I mean, I don't even blame my generation for not wanting to look for jobs that aren't going to pay them properly. Then
Well,
there's also the capacity to actually buy materials to start a business, and that's way out of whack because of inflation. So there's just a lot of problems building.
yeah, there's no doubt about it. If you're a person that's living on government benefits, all right, you're not working, but you're living entirely on government benefits. You got the health care, you got the aid to the children, you got all these various benefits that are available. You might be getting $40,000 worth of government benefits, but if you're not paying taxes on it, it's probably got a market value of $55,000. Whereas if you're making $55,000 or $60,000 a year and paying taxes, you're living a $40,000 lifestyle.
Right.
So yeah, I mean, it's easy to understand why people don't want to go to work. And here's the other economic reality that people need to understand. This is a basic fundamental economic truth. What you tax, you get less of. What you subsidize, you get more of. So our tax system penalizes savings and productivity and income. All right, it punishes those things
Mm-hmm.
by taxing. But on the other hand, we pay people to stay home. So it should be no surprise why people stay home and why people don't want to work. They get punished for working, they get rewarded for staying home.
Right.
What
Right.
you subsidize, you get more of. What you tax, you get less of.
Right. Absolutely. So how do we make some of these changes? How are we supposed to actually fight back and do things? Do we start locally? If we were to start locally, what would we even do?
Well, that's a good question. And the answer is I spent an entire decade of the 1990s fighting at the federal level to get this kind of fundamental tax reform. And I was convinced in my naivete that Congress was going to come to its senses. It was going to recognize that my plan is a much better plan, and they were going to adopt this thing, and that's what was going to happen. Well, none of that ever happened because Congress doesn't come to its senses. Because the fact of the matter is, they don't want to lose the power that we talked about earlier. So I believe
If I believe I've heard this story before, this is when Clinton hijacked your momentum
Clinton hijacked it.
and did
That's a whole
something completely different with your tax
exactly right. That's
reform
exactly
movement momentum.
yep. Yep, no question about
So,
it. The IRS Restructuring and Reform Act. But anyway, that's a whole different discussion. In answer to your question, I have rethought my strategy here, and I believe now that the correct strategy is to go after this thing a state at a time, right?
mhm.
There's about what 44 states out there that have an income tax, and I think we start picking off these states one at a time. So in answer to your question, you do it at a local level. I've spent a great deal of time over the last 2 years in the state of Nebraska. I have been working with a number of citizen organizations, citizen coalitions in the state of Nebraska, whose goal is to abolish their income tax. I testified before the Nebraska Senate Revenue Committee on the viability and the desirability of abolishing their state income tax. I have just recently come back from Nebraska, where I did a legislative policy forum that was attended by a number of state legislators, including the governor's people office of policy folks in the governor's office, to talk about the merits of doing this. So we've got Nebraska that's moving ahead. Iowa is now talking about making fundamental changes to their system. The same discussion is going on in Georgia. Wisconsin has floated some balloons over there about the idea of abolishing their state income tax, and so it's starting to pick up a little bit more momentum. And that is my opinion, what we have to do is pick these states off one at a time. And as more and more and more energy is built through that process, then more realistic pressure
Sure.
can be brought on Congress to make the changes.
Sure. So as soon as the non-income tax states outweigh the income tax states, then people will start to realize the benefits of doing it nationally, federally,
Yeah, that's
and
that's exactly right. And I'll tell you what's going to drive that. And we see that in Minnesota right now. The Center of the American Experiment did a detailed analysis of the migration in and out of the state of Minnesota over the last couple of years. There is a net loss of billions of dollars of gross income in the state of Minnesota over the last couple of years because people are voting with their feet. All right, they're
leaving.
running to non-income tax states. They're
Sure.
going to Florida, they're going to Texas, they're going to Tennessee, they're going to South Dakota. Minnesota, which is one of the highest tax states in the country, has both a personal and corporate income tax, is losing its productive component because people are running from it. And when we get a situation like what you just mentioned, where the non-income tax states outweigh the income tax states, and those non-income tax states are seeing all the benefits of
Lead.
population influx and productive growth, these income tax states are going to have to come to their senses.